So today we're looking at a financial analysis of quantum emotion, or QNC. It's high energy, very FOMO driven, and really designed to capitalize on that recent, 1,300% gain?
Absolutely. And overall, it does a fantastic job of generating hype. The sizzle is definitely there. Our focus today is going to be on grounding that sizzle with the kind of robust evidence a more sophisticated investor needs to see.
Right, turning it from just a breakout alert into a serious institutional play.
Exactly.
Okay, let's dive right in. So a key theme that runs through this whole thing is obviously the massive price movement. I mean, 1,300% year to date, that huge daily jump.
Can't miss it.
You really can't. But when you get to the catalyst section, around 130 in, the justification for this billion-dollar valuation, it feels a little thin. It mentions quantum security and QRNG technology, and just says it's a shield everyone needs.
Right, and that's the core of our first point. The current structure successfully captures that immediate price momentum, but it must more deeply anchor the bullish narrative in the technological fundamentals of the company.
So the price chart is basically doing all the work. It's pulling the fundamental cart instead of the other way around.
That's a perfect way to put it. The listener clearly has expertise here. They know what QRNA-SANC is. What they need to see is why QNSC's solution justifies this kind of, parabolic move.
Okay, so what's the suggestion here? How do we fix that?
Well, the big suggestion is to dedicate more analytical weight to the commercial viability of the QRNG tech before you start throwing out these aggressive price targets.
Get into the weeds a bit more.
Exactly. This is what changes the analysis report from just a momentum alert into a true cybersecurity infrastructure play like it claims to be.
So we need more than just hackers are blocked. We need some real context.
Precisely. Instead of that general shield idea, give us some concrete examples. Who are the primary customers for this? Is QNC working on, say, government defense contracts? Or is this for big financial institutions?
Yeah, like where is the company in its adoption cycle? Is it in a pilot stage or is it already scaling globally? That kind of detail.
That's the billion-dollar question, isn't it? Linking that stage of adoption directly to the valuation. If QNC really solves the true entropy problem better than anyone else, that's the gold nugget that validates everything.
It turns QNC to the moon from a rallying cry into an actual forecast.
And it gives that sophisticated investor the reason to believe the momentum has legs. Real, sustainable legs.
Okay, that makes perfect sense. So once we've anchored that fundamental story, we have to talk about the chart. That $6 target is very aggressive.
It is. Which brings us right to the technicals.
The analysis correctly identifies the blue sky breakout past 450. But while the numbers section earlier says the volume is surging, that data isn't really used. It's not integrated into the technical argument to prove the buying pressure is for real.
And that's our second topic. To elevate the technical analysis from, let's say, aspirational forecasting to a robust prediction, the report has to explicitly integrate those volume metrics as validation for the price targets.
Right now, it's just descriptive. The volume is big. Okay, but so what?
So what? Exactly. There's no evidentiary weight behind it.
I could maybe see an argument, though, that the report is trying to generate that FOMO, that immediate action. Does getting too technical with volume metrics maybe slow that down?
That's a fair question about the tone, but remember the audience goal. We want to attract a sophisticated investor. And a professional needs proof that this isn't just, fleeting retail noise.
They need to see institutional money moving in.
That's it. So the suggestion here is to move beyond just saying volume is surging and use specific, quantifiable analysis to justify breaching that all-time high. You have to prove the conviction.
And how do we do that while keeping the energy up?
I think the key is to use something like the volume-weighted average price, the VWAP. For a stock this volatile, it's perfect. It cuts through the daily noise and confirms if the average buyer, the institutional buyer, is supporting the move.
Ah, okay. The VWAP tells you who's really in control, not just end-of-day numbers.
It's the proof. It shows this is different from a simple pump. So for concrete examples, don't just say a breakout happened.
Be specific.
Be very specific. Say the move past 450 happened on, for instance, a sustained 8-buy average trading volume over 3 days. Or state that the closing price is holding strong above a rising VWAP. That proves the buying is robust.
It makes the claim that we are watching history in the making feel empirically proven, not just, emotionally asserted.
It shows you've done the deep dive. It makes the argument almost bulletproof.
Okay, I like that. That kind of rigor actually sets us up perfectly for the final point. Risk.
The bear case, or the lack thereof.
Right, I can see why it's minimized in the verdict section. They want to maintain that high energy, maximize the perception of reward.
But any sophisticated investor knows that a 1,300% gain comes with massive, massive embedded risk. Ignoring that doesn't build confidence, it actually undermines credibility.
I agree completely. The current bear case is it's so brief. It says a pullback to $4 to cool off the RSI is possible. Don't FOMO your rent money. And that's it.
It only looks at a technical retracement.
It completely overlooks any fundamental risks, any competitive risks, which leads us to the topic sentence here.
The verdict, bull versus bear section, is structurally too brief and positioned too late in the report, making the risk assessment feel like a mandatory disclaimer rather than a sophisticated component of the analysis.
Yeah, it really does. And I wonder, if we're looking at this as a high-growth infrastructure play, isn't there a risk that by only focusing on a technical cool-off, you're missing the bigger picture? Like operational risks?
100%. And you can maintain the bullish tone while still showing you understand those risks. In fact, it makes you more credible.
So the suggestion is twofold.
Twofold. First, make the bear case as substantive and analytical as the bull case. And second, introduce real fundamental risks that are relevant to a fast-moving tech company like this.
Show you've thought about the long game.
Exactly. You could even move the risk discussion up a bit. Maybe put it right after the valuation. As for examples, you have to go beyond RSI. Talk about the potential for capital dilution. I mean, if QNC needs to raise huge amounts of cash to go global, what does that do to the stock?
That's a great point. Or what about competition? Is anyone else emerging in the quantum security space that could challenge their first mover advantage?
Now you're thinking like a portfolio manager. Addressing those deeper structural challenges shows maturity. It elevates the whole piece.
You sell the hype, but you ground it in a sophisticated reality.
By being honest about the challenges, you actually make the bullish case stronger. You've proven you've considered the pitfalls and you still believe.
So to wrap this up, this analysis report is already great at capturing momentum,